Chapter 3. Income. The following forms and publications are used in the research and development of this lesson. Forms and publications are available at www.irs.gov. The IRS has the authority to tax all income from whatever source derived. This is considered worldwide income. I had a client come in and sat down and leaned forward, looking at me intently, and quietly whispering asked, "How do I not pay taxes?" I assumed he was waiting for me to give him some deep secret revelation. Instead, I told him the truth. Don't work. And he kind of looked back at me and like, what? But that is the correct answer. Income tax is tax on income. You earn money, you pay tax on it. This is considered worldwide income. It's humorous in class to discuss the fact that even illegally gained income is still considered taxable income. So if you bribe your city mayor and pay him a bribe, he is to report it as taxable income. If you cultivate marijuana and that is illegal in your state, that is another way they get people. Once you're arrested, you also will pay what the equivalent is of income on that crop and pay taxes on it as well. So the idea is that students will be able to understand that IRS does tax worldwide income. No matter where you earn it, it's taxable income in the United States. So you need to know where wage and other compensation should be reported. Identify earned income. Identify unearned income. Know where the wages are reported and how to read a W-2. Know the filing requirements for Form 1040-EZ, Form 1040-A, and Form 1040. All income, any which way earned, is considered taxable income for the most part. There are a few minor exceptions, but we break them down. The IRS breaks the types of income down into these categories. Wages and other compensation, that is primarily what we deal with, and you probably do in your tax business, W-2 employees. Also, we look at taxable and non-taxable interest, ordinary dividends, qualified dividends, refunds, whether it be state or local or offset taxes, alimony received, business income, capital gains, IRA distributions, pensions and annuities, rental income, royalties, partnerships, farm income, unemployment compensation, Social Security benefits. And we all know that there's always something else, so there is also other income. This is a great chart to give you a general notice of what type of income reporting form goes in what line of the income portion of the 1040. The primary one we do deal with is line 7, wages, salaries, tips, etc., and please attach Form W-2. If a client does not have a W-2 but has a final pay stub, you may be able to do the tax return and give them an estimate, but the IRS requires a W-2 before submitting a tax return. There comes a time, generally February 15th, after which the IRS will accept a substitute W-2, and that form you need to consider and look at only after February 15th. And there are some restrictions there, and attempts, the number of attempts, one of the things they want to know by the taxpayer to collect an additional W-2. Taxable interest, your clients will get a 1099 INT. It will also record if there's any tax-exempt interest. 1099 DIV, the form for ordinary dividends, and the difference on 8B and 8A, as also 9B and 9A, is again the taxable portion and the non-taxable portion. Taxable refunds, that will vary and depend on per state as well as if itemized deductions were claimed the previous year to know if there's anything to enter as income on line 10. Alimony received, primarily you're going to find that information from your client telling you. Schedule C is business income or loss. Schedule D for capital gains. 1099-R is primarily how we learn of pension monies that were pulled out either early, which may result in a penalty, and will be discussed in more detail later. Schedule E for rentals. It does also is what will be filed for royalties, partnerships, S corporations, but usually we deal with rentals and their expenses and income. Farm income or loss. Some of these could be a loss. Schedule F, unemployment. We get that notice on a 1099-G. Social Security benefits, SSA 1099. And then there are other income. Gambling winnings are a primary one we see, W2G. Or if they have a cancellation of debt through a credit card, mortgage, they would receive a 1099-C, and that could be reported here. Or a 1099-A. There are some instances where they get a 1099 miscellaneous, and it would go here as opposed to be included either with a Schedule C or even line 7 possibly. Adding all those together, then you arrive at line 22, which is total income. So let's look at these in more detail. Again, line 7, wages, salaries, and tips, received as an employee in exchange for services. I'm hired by company ABC, and I do work for them, and they pay me for that work. At the end of the year, they give me a W-2. Shows the total amount of income earned for the year, gross income as it's called, plus any and all deductions. Federal taxes, state taxes if applicable, Social Security, Medicare, and any additional voluntary like health insurance and things. Compensation received not as an employee is reported on 1099 miscellaneous. Now sometimes we get those in connection with the W-2, whereas this is how this was paid for a bonus, and therefore needs to know you need to determine whether Social Security and Medicare tax needs to be taken out or not. Also, compensation can include everything received in payment for personal services, so even cash. One thing to remember is that the taxpayers who provide child care in their home are considered to be self-employed, and we will discuss that in a different chapter, but it is income. Tips received need to be reported to the employer. Tips over $20 not reported to the employer needs to be reported on the tax return on Form 4137, which is included as wage income. But seriously, I've never seen anyone who's a server report any tips above and beyond what is included in the W-2. Hopefully, that is accurate for their sake. Interest and dividends. Taxable interest and dividends we will cover more in detail in Chapter 4. But taxable refunds, credits, or offsets of state and local income tax, again, there are some variables we will look at and consider in more detail later that would affect whether refunds have to be included as income. Alimony received is income to the recipient. The payer will receive an adjustment to income discussed at a later time. There is the slight off chance that the one paying alimony did not report that as an adjustment or reduction of their taxable income. In that particular case, then received alimony does not need to be reported as income. But that you would really want to cover and make sure. The other key point is this is not a typical thing that you would ask any client. Are you receiving alimony? As a means of interviewing at the beginning. Usually it is something they volunteer and give, and report to you so that you can include it. Business income. Now this income derives from the information that is input into Schedule C, which will be discussed at a later date. Line 12 on the 1040 is for Schedule C. And line 18 is for Schedule F, farm income. Types of sole proprietor business income. For instance, I have several clients that do Avon sales, and that would be a sole proprietor, one person. Insurance commissions, farm income such as breeding even cats and dogs. And generally, you'll find, most of my Schedule C clients end up being, landscapers, contractors, subcontractors, etc. Capital gain or loss. This income will be discussed in more detail later, but this is when this type of income is reported, it will automatically be reported on a Form 1040. It's not a short form issue. It can only be input on Form 1040. Typical types of capital gains: sale of a personal residence, sale of a business, stocks, bonds, treasury bills, etc., artwork, antique cars, any capital asset that's sold. Also, IRAs or pensions and annuities. This income will be discussed again in more detail at a later date. You will find this as a tax preparer mostly reported from a Form 1099-R. And this seems to be a common occurrence with amendments, is that these forms generally end up being mailed out late. So tax returns have been completed and filed, and then the client receives a 1099-R from that source of income holders, and then they come back in and we'll have to do an amendment. The income needs to be filed on a Form 1040. So what types of IRAs, pensions, and annuities do we usually deal with? 401ks, or as we see, 403bs for nurses and medical profession, Social Security benefits, railroad retirement, insurance, annuities, pension plans from work, and others such as this. Rental real estate, royalties, partnerships are generally reported on Schedule E and then input into the first page of the 1040 on line 17. All of this income must be reported on a 1040, otherwise called the long form. Types of Schedule E income, mostly that we deal with, will be rentals. Having an additional home that they rent out and therefore have to include the income, but also can deduct expenses. Could be royalties from a song or a trademark. Could be partnership, not the partnership return itself, but you've received a K-1 for your share of the partnership that has to be included as income. Or as an S corporation, income received on a K-1. Farm income. Now we will discuss this income in more detail at a later time. Taxpayers in the business of farming if they cultivate, operate, or manage a farm for profit, either as an owner or a tenant. A farm includes livestock, dairy, poultry, fish, fruit, and truck farms. It also includes plantations, ranches, ranges, and orchards. Now, types of farm income that we generally deal with: horse breeders, crop growers. This is one you don't think of normally: dog breeders. My brother breeds and grows and raises border collies and then shows them, so they become championship status and class, which allows him to charge higher breeding costs. And so he has a business. This would be reported on Schedule F and not Schedule C. Agriculture, obviously, and any other such types of described farm activity. Now here's an example of a W-2. The boxes will all remain the same, but you will notice, I'm sure as you do taxes, a wide variety of sizes and shapes and styles of W-2s. But they must all include all the boxes that you see here on the screen. You need the employee's Social Security number. You need the employer's identification number and name and address and zip code. You need the employee's name and address and zip code. The box 1 is the primary one you're going to look at, which is wages, tips, and other compensation. Box 2 is also one to focus on, which is federal income tax withheld. Another key point is state. If you have state taxes in your state, then you want to look for your state two-letter ID. For instance, here, California, CA, and then the employer's state ID. State wages, box 16, usually match box 1, but not always. And of course, if they did withhold any state income tax. You may also find local taxes that are reported on a W-2. Again, the W-2 is a requirement to do your taxes by the IRS. So if you get a client who says, well, I never received my W-2, here's my final pay stub, then you want to encourage them to go and seek out the business owner and to receive, if they did mail a copy, get another copy. And very important that they have the W-2, not only for your own records, but also for reporting to the IRS. If by chance you still cannot get one, and it's after February 15th, IRS does have a substitute W-2 that you can fill out. Now that concludes income in general for this particular webinar. So do Chapter 3, review questions and the TPAs online. You need to pass with a 70% or better, and read Chapter 4 for next time. Thank you.